Bitcoin, the world's leading cryptocurrency, is flashing a potentially significant signal for investors. Exchange reserves are dwindling. Data reveals that Bitcoin reserves held on exchanges have plummeted to a new all-time low of 2.35 million BTC. This decline is particularly noteworthy given the current bullish sentiment surrounding Bitcoin. Such a significant drop in reserves begs the question, what does this mean for the future of Bitcoin's price? Historically, similar declines have foreshadowed periods of significant price appreciation. Is history poised to repeat itself? Adding to the intrigue of the current situation is the fact that this is the first time in Bitcoin's history that exchange reserves have consistently decreased during a bull market. Typically, during periods of market optimism and price growth, exchange reserves tend to increase as more investors deposit their Bitcoin on exchanges, anticipating selling at higher prices. The current decline, therefore, suggests a shift in investor behavior. Instead of seeking to sell, investors appear to be withdrawing their Bitcoin from exchanges, potentially with the intention of holding it for the long term. This reduction in available supply on exchanges could have significant implications for Bitcoin's price. Looking back at Bitcoin's historical price movements, we can observe a clear correlation between periods of low exchange reserves and subsequent price surges. One compelling example is the bull run of 2021. As exchange reserves dipped below 2.5 million BTC, Bitcoin's price embarked on a meteoric rise. Starting at around $10,000, Bitcoin reached an all-time high of nearly $69,000 in a matter of months. This surge coincided with a period of sustained decline in exchange reserves, mirroring the trend we are currently witnessing. Could this be a sign that another major price rally is on the horizon? Section 4. Brace for Impact. Understanding the looming Bitcoin supply shock. The ongoing decline in Bitcoin exchange reserves points towards a potential supply shock scenario. This trend has been observed over the past few months, with more and more Bitcoin being withdrawn from exchanges and moved into private wallets or cold storage. This movement indicates that investors are holding on to their Bitcoin, anticipating future price increases. In simple terms, a supply shock occurs when the available supply of an asset decreases, while demand remains constant or increases. This imbalance between supply and demand can lead to significant price volatility. For Bitcoin, this means that as the supply on exchanges dwindles, any surge in demand could cause prices to skyrocket. In the context of Bitcoin, this means that with fewer Bitcoins available on exchanges to buy, even a small increase in buying pressure could lead to a significant price surge. Traders and investors need to be aware of this dynamic, as it can create both opportunities and risks in the market. This effect is further amplified by the fact that Bitcoin has a fixed supply cap of 21 million coins. Unlike traditional currencies, which can be printed in unlimited quantities, Bitcoin's supply is strictly limited. This scarcity is a fundamental aspect of its value proposition. As more Bitcoin is held off exchanges, the supply available for trading diminishes, potentially creating an environment ripe for rapid price appreciation. Investors moving their Bitcoin to cold storage are essentially taking it out of circulation, which can exacerbate the supply shock. This trend is something to watch closely, as it could have significant implications for Bitcoin's future price movements. Section 5. Charting the course. Price targets and resistance levels. Analyzing current market data, technical analysts have identified potential price targets and resistance levels that provide further clues about Bitcoin's potential trajectory. These levels are crucial for traders and investors as they help in making informed decisions about entry and exit points. By understanding where these levels lie, one can better anticipate market movements and strategize accordingly. Currently, a key level to watch is the $99,000 mark, which represents a significant psychological barrier. This level has been tested multiple times in the past, and each time it has either held strong or caused a temporary pullback. Traders are keenly observing this level to gauge market sentiment and potential future movements. Breaking above this level with conviction could trigger a wave of buying that propels Bitcoin towards the next major resistance zone around $102,400. This surge could be fueled by both retail and institutional investors looking to capitalize on the momentum. This level is significant because it represents a confluence of previous highs and a high concentration of liquidity, meaning a large number of buy and sell orders are clustered around this price point. the $102,400 level, has historically acted as a strong resistance, and breaking through it could signal a new bullish phase for Bitcoin. If Bitcoin manages to overcome this resistance, it could pave the way for a move towards $104,000 or even higher. This would not only attract more investors, but also potentially lead to increased media coverage and public interest, further driving the price upwards. However, it is important to note that these are just potential scenarios, and the market remains inherently unpredictable. Various factors, including macroeconomic events, regulatory news, and market sentiment, can all influence Bitcoin's price. Therefore, while these targets and resistance levels provide a roadmap, they are not guarantees. Investors should always conduct their own research and consider multiple factors before making any trading decisions. Section 6. David versus Goliath. Bitcoin outperforms crypto VC investments. While the world of traditional finance grapples with the implications of declining Bitcoin reserves, an interesting trend has emerged within the cryptocurrency sector itself. Bitcoin, the original cryptocurrency, has shown remarkable resilience and growth, even as newer, more complex projects have entered the market. This trend is not just a fleeting moment, but a significant shift in the investment landscape. Bitcoin, despite its age and relative simplicity, continues to outperform investments made in venture capital-backed cryptocurrency projects. This is a testament to its robust design and the trust it has garnered over the years. Investors are increasingly seeing Bitcoin as a safer bet compared to the volatile and often unpredictable nature of VC-backed crypto startups. This trend became particularly evident during the market cycles of 2020 to 2024. During this period, Bitcoin's performance was not just a fluke, but a consistent pattern of growth and resilience. The data from these years clearly shows how Bitcoin managed to navigate through market turbulences better than many of its counterparts. While Bitcoin surged from $10,000 to $69,000 and subsequently broke through the $100,000 mark, it demonstrated its potential as a long-term investment. This surge was not just a speculative bubble, but was backed by increasing adoption and institutional interest. Venture capital investments in the cryptocurrency space experienced a boom and bust cycle. Many of these projects, despite initial hype and significant funding, failed to deliver on their promises, leading to substantial losses for investors. Funding peaked in early 2022 but then declined sharply, reflecting the market's growing skepticism towards these high-risk investments. The decline was a wake-up call for many investors who had poured money into speculative projects without fully understanding the risks involved. Remaining relatively stagnant even as Bitcoin's price recovered and reached new highs, the venture capital sector struggled to regain its footing. This contrast highlights the enduring appeal of Bitcoin and its ability to weather financial storms better than many of its more modern counterparts. Section 7. The evolving landscape, on-chain crime, and the rise of stablecoins. The evolving landscape of the cryptocurrency ecosystem is another factor that could influence Bitcoin's future. One positive development has been the significant decrease in Bitcoin's use in on-chain criminal activities. From 2020 to 2024, the percentage of Bitcoin transactions associated with illicit activities declined substantially, demonstrating the growing legitimacy of Bitcoin as a financial asset. Paradoxically, this decline in Bitcoin-related crime coincided with a steady increase in the use of stablecoins for illicit purposes. By 2024, stablecoins accounted for a majority of the total illicit transaction volume, highlighting the shifting dynamics within the cryptocurrency ecosystem.